Good day, this is Adam Misama once again, and today I'm going to be focusing on talking about the breaker and the rules. Okay, and it's very important to understand this. The last video that I did for YouTube is on breaker, and I mentioned some fact about it, which I will repeat today. Then we talk about these two because I need to really finish this on time. Okay, talk about these two. So if you understand or you watch my videos, the last video that I did on breaker, on breaker, if you watch it, you will remember I said breaker is a failed order block. When price was going up like this, coming down, going up, coming all the way down, they will say, or ICT will say, that the last bearish candle before this up movement is the what? Is the order block. So continuously like that. So if this last bearish movement, last bearish candle before this up movement is broken down, this position now become, the other block become a breaker, so we call it BMS. And I said after that the direction will change, but all we are talking about, or what we are going to be talking about, is about breaker to what? To breaker. So the first rule is that whenever you are seeing a break of market structure on a time frame, okay, and see a break of market structure on a time frame, go to higher time frame to look for what? Another break of market structure. What I mean by that is very simple. Let's say you are seeing a break of market structure. Let's say this is a 4 hours what? Time frame, and you see this break of market structure, a breaker on 4 hours. You have to go to what? W1, or most likely W1. Let me just call it W1. Don't let me form too much. Okay, W1. When you see this, you go to W1 to confirm whether the bearish break of market structure that you are seeing here is, or let me say bearish breaker that you are seeing here, is the same family with the breaker that you are seeing on W1 on weekly time frame. That is, this is a bearish breaker. You should be looking for bearish, the last bearish breaker on what? On W1 also, so that this movement can be pure to the downside. If the last breaker on W1 is bullish, again, if the last breaker on W1 is bullish, this is just coming for a what? Liquidity to continue to go up. So in one way or one form or the other, your lower time frame break of market structure is what? It's less important to higher time frame break of market structure. That is, your lower time frame breaker is less important to lower time frame break, higher time frame breaker. Okay, so always look out for your breaker on higher time, on lower time frame first. Whenever you see a breaker on lower time frame, which can be 4 hours, your daily time frame. Okay, because I will write something down now that will explain better for you the time frame to look out for. Okay, so you don't need to disturb yourself. So I'm just using these 4 hours as an example so that you understand my work better. Okay, So let's say you are looking at daily time frame. Let's use that one. If I'm looking at daily time frame, let's say my let me clean this one also. The time frame of observation, or that I'm observing now, is daily time frame, and it gave me a bearish break of market structure to the downside. That is a bearish breaker. Then I will go to monthly time frame to look out for another breaker, the last breaker that monthly time frame is showing. If it is also bearish break of market structure, that is bearish breaker, that means this direction will go down. This break of market structure that you are seeing will go down, will come down, the other flow will be down. But if the monthly last breakout, or last break of market structure, or last breaker that you can see on the monthly time frame is what is bullish, this is just coming for what? This daily time frame chart is just coming for what? Liquidity to push price higher, So that is the first law. You just need to understand, like you have it here. That is the first rule. Okay, this breaker to breaker is the first rule that you need to understand. Always remember that higher time frame, lower time frame break of market structure is less important or less relevant to higher time frame break of market structure. So that's why we call it breaker to breaker principle. The breaker on higher time frame is more important than the breaker on lower time frame. So whatever you are seeing on higher time frame, okay, or whatever you are seeing on lower time frame, just take it to higher time frame to see whether that break of market structure is in line, in the same way or in the same direction with the higher time frame break of market structure, the last break of market structure. Okay, the last breaker. So going back to this place, I will now write like a time frame and that you should be looking out for. Sorry about that. So if I'm looking at break of market structure on lower time frame, what time frame should I go for on higher time frame to check? So let's say I'm looking at let me start from 30 minutes or 1 hour. Let me start from 30 minutes. So I'll be looking at 4 hours for those who love lower time frame very well. If I'm on 1 hour, I'll look for daily time frame. If I'm on 4 hours, I'll look for W1. And if I'm on daily time frame, if I see break of market structure, then I will be looking out for that order flow on what? On monthly time frame. So the same thing I'm looking out for. This is just BMS, while this point is order flow. Still the same thing. Why do I call it the same thing? Because we are looking, considering the last breakout here, which is the last breaker, the last breakout here also. But we want the lower time frame considered here to be in line with this one before we can follow this direction. If it is not in line with higher time frame order flow or breakout or the last breaker of monthly time frame, we will not consider this. We'll be following this direction of the monthly. I will show you an example right now on Bitcoin. everybody will see this as break of market structure no matter what. Now, like I said once you see break of market structure on lower time frame, go to higher time frame. And what time frame are we on? On the daily time frame. So we are going to monthly time frame to check whether this bearishness is in line with what? The monthly time frame. So I will mark it with our green line here. So we now go to monthly time frame. So the rule, I will state the rules to you very soon. Now we have nothing here. Then price came down into this order block, whether you call it or you know it or not. This is still two straight downward candle. This order block come into that level before going up. So the real rule that I want you to follow, or that you must follow, is that the break of market structure that you see, this rule that I want to state here, the break of market structure that you see, lower time frame, BMS, breaker or BMS, let me use that word, BMS, then let me use breaker. BMS, that's the break of market structure, is less important to higher time frame PDRA. And like I said, I don't use all the PDRAs, but if you want to learn more about it, go to ICT YouTube channel, you know about PDRAs, and then these are the PDRAs that I'm using. Okay, so it's less important. So like we have here, these two candles here, 1 and 2, they are what? Order block. So price came for the order block, not for something else, for the order block. So once you are seeing a break of market structure, come on, a break of market structure here, you might be saying, okay, I'm going on, okay, but on the higher time frame, it's just an order block. So price touched another block and started going up. And if you want to refine it more, you can go to your, what do you call it, weekly time frame, and say there is fair value gap there. Okay, so in this fair value gap, price touched it and it's still going up. Is it going to go forever? I don't know, but I'm still looking out for 130 area for this Bitcoin, so that we can proceed from there. Fair value gap going up, but here is an order block. That's all you need to see. Order block, that's all you need to see. Okay, so more example, if you like, go to higher time frame, look out for it. Let's say we are looking at for this. I'm just looking at this level. Some people will say it's break of market structure, so price, you just do this and come down. Most of the time, that's what they are looking for. They are taught how to use order block, but and break of market structure, if you see break of market structure, the next thing is to go for order block and blah blah blah. Okay, but if we look at this and say this is our break of market structure, okay, so we should go to what? Monthly time frame, again. This is it. If you don't see it, let me show you very well. I want it to pop up. Okay, you see that? So here it is still like price came all the way down to this other block. You see that? The body. It's going to use the body here. Okay, so I will just carry this and come here. Sorry. Okay, so it's price coming to the body of this candle. Okay, but here it looks like break of market structure, but it's a lie. If you take this point into consideration and go to weekly time frame also, which is a little bit, the next thing that you'll be looking out for is coming to fair value gap. You know what fair value gap is, and that's why it is important to know what the PDR is. Feel the fair value gap and started going up. So always look out for that. No matter what, check your 4 hours. Let's look at 4 hours and see where is break of market structure. Okay, let's look at this. This is a break of market structure. Price to this is a breaker. Is it going to continue to go down? Some people you will say, okay, it's going down. Let's check. I just want to use this for an example so that we can see it better. So I say from 4 hours you go to weekly. Up here. If you cannot see it very well, go to that. Okay, like you go step lower, a step lower, one time frame lower. Here is nothing, but if I want to count it, I will count it as order block. This candle price has gone up above it before, so this candle is an order block. Some people will not take that, but as you can see it, when price break structure, okay, even another structure is broken here to the downside. Okay, I will still expect this candle as my what order block again, push price to the upside. So already it's showing you more examples. Okay, but if you don't see very well, which I will tell you what time or week of the month you should be looking out for all this kind of pattern one way or the other. So that's where I'm going to stop now. The law is still simple. You are looking for one breaker on higher time frame and another breaker on lower time frame, especially lower time frame breaker. Once you see that, you can go to higher time frame to say, I'm going to use you to find direction. Higher time frame breaker to find direction. Okay, from there we'll be talking about liquidity, location, and the golden pattern, and from there our weekly review will start. Thank you for your time.